Hey guys, welcome back. In today's video, we are talking about the bad news for short, how all eyes on AMC, the massive breakout, and many more in this video. Firstly, we're taking a look at this. Not good news for over-leveraged big banks. Moody's on Monday downgraded the long-term ratings of top American lenders such as JP Morgan Chase, Bank of America, and Wells Fargo after pushing the US out of top AAA rating club over its burgeoning $36 trillion debt. So this is where we are right now with these over-leveraged banks. For those of you who've been paying attention recently, you see that there are many focuses right now on whether it's institutions like hedge funds or these large banks that are extremely over-leveraged. In April, in March, in February, we saw how institutions had to close out their over-leveraged positions like Citadel. Now we're seeing how these over-leveraged big banks are also getting their ratings downgraded. And what this means as well, when we take a look at Bank of America, is about understanding their influence and their relationships with the short sellers. For those of you who know, Bank of America is obviously the prime lender of Citadel. So if we are seeing them in a time where they're deemed as risky, where they are extremely over leveraged, we're going to be seeing them potentially recalling their loans. We're going to be seeing them in a position where they can't hand out any more loans. And so Citadel, who once relied on Bank of America in order to get capital, in order to suppress AMC and GME, they're going to be seeing the difficulties that are coming with them as we see these ratings get downgraded. And so this is what we are looking at when we talk about how shorts are, of course, in a very bad illiquidity problem, as we see that their over leveraged positions aren't going to get financed any longer. And again, this just highlights just how bad, the overall economy right now is, and just shows the riskiness and all the risk exposure there is for whether it's banks, whether it's these institutions that are trading, it's all being highlighted out there. Furthermore, you can also see there's all eyes on AMC. Short flow continues to rise from 11% to nearly 15%. Record-breaking box office for Final Destination franchise, earning $105 million opening week. Huge upcoming movies, Mission Impossible, and Disney's live action of Lilo and Stitch. And so this is where we are at with AMC. We just talked about how the short sellers of AMC are facing multiple problems. They are all extremely over leveraged. The regulations are extremely worried about them, and they were forced to close out their positions. But on the other hand, when you take a look at AMC, they are doing extremely well. We have extremely good movies that are coming out. That's obviously showing good future. It's very optimistic with how we are at. We're seeing how AMC are able to improve their infrastructure. We're seeing how AMC is going to go on to make more profit. We're seeing how everyone's supporting AMC. We're seeing how everyone's buying AMC. And so that's where we are at. And then we're looking at how shorts are trying to then increase their pressure as they are faced with difficulties. One of the biggest things they're worried about when they are faced with these illiquidity problems is that they are worried that AMC is going to go up. They are worried that GME is going to go up. And you can see when they are struggling with these ratings, when they are struggling with capital, we're seeing how AMC is actually increasing in price. And this is just a reflection of the weakness in these shorts. And so going back to this is what we talked about. At times like this, they are trying to suppress AMC the most because not only do they not have the money to finance the positions, but when AMC goes up in value, they also don't have the money to continue still holding on to those positions because they're going to be experiencing large losses. And that's why we're seeing the short interest increase. That's why we're seeing the short pressure increase as well. Another thing though is whilst we're looking at how they're trying to suppress AMC, we're seeing how there are lots of optimism for AMC. We're seeing how there are massive interest in AMC. You can see the open interest stats where we're looking at the call open at 1 million and the put open interest at 155,000. So the put to call open ratio is 0.15. And where you guys can take a look at this. And when you take a look at the focus of what these calls are, it gives another story of what people are looking for. So if you guys want to take a look at the Grok explanation, you can see this image shows AMC options data with high call option interest and a low put call ratio, indicating strong bullish sentiment. Traders are betting on significant price increases, especially the 2026 options with strike prices like 20, far above AMC's current 2.9. And so that's obviously where we are at when you take a look at this as well. And you can see it's even got, of course, the 2025-27 calls. That's where everyone is focusing. Everyone realizes how much there is for potential for AMC. And right now, what the call options are telling us is just the optimism there is. It's just the confidence there is in AMC. And hence why we said shorts are worried and why we're waiting for massive breakouts. Another thing you can see, better late than never. Welcome to the AMC Wall of Shame. A small hedge fund now openly shorted AMC on several occasions, and this is what we are looking at. So this is pretty much a list where it just showcases essentially everyone who's been taken out or at least faced big losses because of AMC. And you can take a look at some and you will definitely know, of course, some. We talked about Tiger Global ones, we talked about kohrs, we know Credit Suisse, we know Citron, Antara, we know B. Riley. These are just on the wall of shame in terms of firms that took a position in short against AMC and it hasn't worked out for them. And rather than AMC going bankrupt, rather than AMC experiencing large losses, actually these short sellers went bankrupt, these short sellers faced large losses. And so one thing we have to realize is that everyone is worried about AMC because it's not squeezing the next day, it's not squeezing the next week. We don't know when it's going to squeeze. But when you take a look at what's happening, the shorts that have been shorting AMC from the very start has all gone bankrupt, or at least not all of them, but a majority of them have gone bankrupt. Throughout these last 4 years, whilst AMC hasn't squeezed, the short sellers who have been shorting AMC have gone bankrupt, and AMC is still alive and kicking. And I think that's the very important thing that everyone is, again, disregarding, because they're worried about how AMC hasn't squeezed. But you have to understand, slowly, one by one, we're taking out these shorts. And when all of these shorts go out, they don't have the positions anymore. They can't carry on these positions. They can't throw it off to someone else, because we know that the Credit Suisse short positions were obviously inherited by UBS. And when no one else can inherit these positions, when no one else can finance these short positions, the one that's left last with these bags of shorts will obviously have to cover, and that's when the squeeze will happen. And that's what we have to obviously look out for. You can also understand AMC. What happens when robust number of big movies hit the theater and begin to bargain for screen time? Does AMC start getting a larger cut of the pie each weekend to choose one movie over another? Do they stagger the dates to keep every weekend fully loaded up? But this is essentially just talking about the opportunity there are for AMC right now. We have to understand is that right now we're experiencing a massive surge in the box office. We have multiple movies that are coming out with huge potential, which is going to bring in, hundreds of millions, if not billions of dollars in terms of box office. We're going to be seeing them obviously able to let AMC profit off largely. We talked about AMC has improved their business structure, their business infrastructure, and so they're able to profit well with the same box office. And even if we were to get even bigger box office, we're obviously going to make more. And we talked about how AMC obviously making more revenue will put them in a very, very good position. Obviously, whether it's with more investment, whether it's paying off debt, whether it's improving their infrastructure, improving their businesses, whether it's to issue out dividends, right? There are so many different options, and that's going to happen as we're seeing the box office go up. And now we talked about this. We've just talked about how we've seen the call options on AMC. We talked about how people want to buy AMC, how people realize where AMC is going to go. And now we're also seeing is that breaking institutional investors acquire 43.1 million AMC shares in Q1 of 2025. Vanguard buys 4.61 million shares and Morgan Stanley purchased 2.06 million shares. And so this is just a highlight where AMC is at. Again, you see all of these news that are telling you to sell AMC, that are telling you to stay away from AMC. But evidently, that is not the case for institutions, as we're seeing them buy more and more. One thing you will realize is that the articles that are telling you to sell your AMC shares, that are telling you to stay away from AMC shares, are increasing, or they are getting more and more often, right? You'll see them more commonly. But something else that you will see more commonly is how institutions are buying AMC shares. So that really tells you the story, is that they're trying to give you a image of AMC is bad, so that retail investors sell, so that institutions can obviously scoop up all of these shares and then profit off of these. And that's what they're trying to do. But again, none of this is financial advice, so do so guys, saying growing so much, do your own due diligence and research, and I'll catch you guys next time.